What if I told you there's a way to predict where crypto is going? Not days ahead, not hours ahead, but 15 minutes ahead. And it's not some scam indicator or AI signal group. It's pure math, pure market structure. And someone already made $400,000 a month doing it. Let me explain. Here's something most people don't realize. Not all markets move at the same speed. Binance, the world's largest crypto exchange, updates Bitcoin's price thousands of times per second. It's the fastest, most liquid market on the planet. When news breaks, Binance moves first. Now, there's another type of market, prediction markets. Platforms like Kalshi let you bet on simple yes or no questions. Things like, will Bitcoin be above $100,000 at 3 p.m. today? These contracts settle every 15 minutes. You buy yes or a no, and if you're right, you get $1. Simple. But here's the thing. These prediction market contracts don't reprice as fast as Binance. There's a lag. And where there's a lag, there's an edge. Let me walk you through a specific scenario. It's 2:50 p.m. There's a contract that settles at 3 p.m. Will Bitcoin be above $100,000 at 3 p.m.? Currently, Bitcoin is at 99,800. The yes contract is trading at 40 cents. The market thinks there's about a 40% chance Bitcoin finishes above the line. Now, at 2:51 p.m., Binance shows Bitcoin jumping to 100,300. A 0.5% move with 9 minutes left on the clock. Think about what just happened. Bitcoin is now $300 above the strike with 9 minutes until settlement. For this contract to lose, Bitcoin would need to drop 0.5% in 9 minutes. That happens, but it's rare. Historically, maybe 10 to 15% of the time. So the fair value of this yes contract should be around 85 to 90 cents. But on the prediction market, it's still sitting at 60 cents. Why? Because the order books are thinner. Fewer market makers. Slower repricing. You buy at 60 cents. 9 minutes later, Bitcoin is still above 100,000. Contract settles at $1. You just made 40 cents per contract, a 67% return in 9 minutes. This isn't just theory. There was a trader, anonymous, obviously, who was doing exactly this on prediction markets, buying hundreds of contracts per settlement window, multiple times per day. The math was simple. Even with a few losers mixed in, the expected value was massively positive. The numbers that leaked? Roughly $400,000 a month in profit. Not from insider trading. Not from manipulation. Just from being faster than the order book. The edge comes from three things: speed of information processing, understanding of the implied probability math, and the willingness to size positions correctly when the odds are in your favor. Now, before you go empty your savings account, let me be honest about why this isn't a free money printer. First, liquidity. These prediction markets are still young. You can't always get filled at the price you want. Try to buy 1,000 contracts at 60 cents, and you might push the price to 75 cents before you're done. Second, speed. By the time you manually check Binance, calculate the implied probability, switch to the prediction market, and place your order, the window is closed. You need to automate this. We're talking real-time price feeds, probability models, and automated order execution. That's not a weekend project. Third, the edge is shrinking. More sophisticated traders are entering these markets every month. The lag between Binance price moves and prediction market repricing is getting shorter. A year ago, you might have had 5 minutes of mispricing. Now it might be 30 seconds. Fourth, regulation. Prediction markets operate in a gray area in many jurisdictions. Kalshi is regulated by the CFTC, which is great, but the regulatory landscape is shifting fast. Here's what fascinates me about this. It's not really about crypto. It's about market structure. Anytime you have two markets pricing the same underlying event at different speeds, this arbitrage exists. It happened with sports betting when live odds lagged behind what was happening on the field. It happened with options markets before electronic trading. And it's happening right now with crypto and prediction markets. The question is, how long does the window stay open? If history is any guide, not long. Arbitrage opportunities exist to be closed. The more people who know about them, the faster they disappear. That's literally how efficient markets are made. But for right now, the math works. The infrastructure is there. And someone with the right technical skills could build a system that exploits this gap. So here's my question for you. Should we build this? I'm talking a fully automated system, real-time price feeds from Binance, probability calculator, automatic order placement on prediction markets when the edge exceeds a threshold. The whole pipeline. Would you want to see that? The code, the math, the live results, all of it documented? Drop a comment below. And if this got you thinking about market structure in a new way, subscribe, because we're going deep on this stuff.